everybody. Welcome to the morning market briefing. It's Tuesday, April 26, 2022. Kind of shocked it's only Tuesday. I feel like yesterday was a real grind. We had an all hands on deck emergency investment committee meeting to talk about hypothetical scenarios. I don't know. I kind of like those. I feel like we got some good banter and wild ideas out of it.
Yeah, we went over a lot of, we started thinking, if the war continues going on, if things really start to turn, what are some good ideas? We got into some funeral home services companies, coffins. We talked eggs for a while.
Yeah,
just kind of, if things go wrong, what are the options? And so we just had a nice long hour-long meeting on weird ideas.
Yeah, it was a weird discussion. Definitely some companies that maybe you've heard of but didn't even realize were publicly traded, and spent some time looking at those. But I don't know. I feel like those discussions are always productive. I mean, we normally have very regimented meetings for the investment committee on Tuesday and Friday. So having something a little off the wall was kind of fun. I don't know. I enjoyed projects like that. So busy day. Market was real rocky yesterday, ended up closing up right now as we look at how we are positioned. Obviously, in the middle of earnings season, you're going to see a lot of impact related on how companies actually hold up on a day-by-day basis. This is an incredibly busy week. Lots of big earnings coming out, especially on the tech side. So lots of names to kind of keep an eye on, including I think Microsoft is today, this afternoon. So we'll have a report on that tomorrow. As a reminder, we do have Thursday happy hour at Glover Park Brewery, kind of off Marietta Square, 4 o'clock to 7 o'clock. Just show up, hang out, have a couple beers, chat with us. Should be a good time. No agenda, no content. You don't have to listen to Ben talk for a long time. You don't have to listen to Ben even this morning. Ben in a meeting. I think he's boycotting the morning calls for some reason, but we'll probably get him back in here tomorrow. Let's jump in. Biggest story of the day yesterday across the market, also even dripping into kind of the mainstream news cycle, was Elon Musk buying Twitter. Got unanimous board approval for that purchase. A $44 billion deal. It'll go into a holding company held entirely by him. So it will be, his baby. No other investors in there, completely his. Tom, as you think about this, it's a pretty unbelievable story. And we talk a lot about Elon Musk. He makes a lot of headlines, as we talked about yesterday. He stirs the pot a lot. But to see someone known really primarily for other ventures take a company of Twitter's size down completely is a pretty wild story. Keep in mind, we think a lot of acquisitions that are, big names that acquire things. A lot of times we're thinking about, hey, Warren Buffett is buying Pilot Flying J. It's like, well, that's what Warren Buffett is known for. Elon Musk is not known for somebody that's going to buy a massive social media company, one of the bigger companies in the United States. So buying Twitter for $44 billion. How do you see this playing out, and what's his angle and what implications do you think are there?
I think there's a lot of implications. I think his angle is to sort of clean up Twitter. I think there's been a lot of cronyism on the board. I think they really kind of have just been kind of taking a paycheck, letting Twitter kind of do its thing. When there's been backlash, they put in rules and kind of arbitrary shadow banning or turning people off that they don't feel like are promoting Twitter in a good way. And I think this is just a full reset on Twitter. He kind of wants to go into subscription-based business. He floated out a tweet a couple weeks ago where you pay $2 and you can be verified, but you've got to be a real person. Shutting down the bots, shutting down the algorithms, that push certain news stories, or at least exposing how they are programmed, so you can kind of get an idea for how things get slanted. I think that's part of the agenda. Some of the stuff I think is interesting is I wonder how much exposure is going to be of either, I wouldn't call it corrupt practices, but, perhaps unusual practices or things that were pushed or any sort of precedent that was set pre-Elon taking over that's going to perhaps either cause problems for people, either they're on the board or political figures or companies. I'm super interested to see what comes out of this because his claim is transparency. So there could be a lot of information that comes flooding out all at once.
Yeah, I almost wonder if he has some of that information already. I mean, it felt like a real narrative shift from early last week when it went from, Musk has acquired a large stake. He wants a board seat. He doesn't want a board seat. He wants to buy the whole company. it seemed like those initial conversations were pretty strongly rebuffed, at least in headlines. And the price didn't change. I mean, he made it pretty clear from the onset that, hey, this is my final offer. Something changed, though, among that board to get to a spot where, in relatively short order, without a change in price, there was unanimous approval of this transaction. And I wonder if some of that's not, I don't want to call it blackmail, but a little bit of, hey, Logan, we know you've been on the board of Twitter. We know Twitter's been doing this. We can take this thing private and move on.
I'll sign an NDA.
Yeah.
We won't blow you up, but at the same time, you got to walk.
And that's completely speculation, man. I don't know anything that the general public doesn't know. But I think it will be interesting. I mean, I think he has a general view of wanting it to be a more open place for communication. And I think there's been a number of issues. I think of the New York Post, Hunter Biden laptop story. I'm not here to get into the politics of it all, but that was very much positioned as, fake news by Twitter. It was blocked. They lost their right to post things and promote things. You couldn't even link that article as an independent, just Twitter user. At the time, I think the general positioning was this is, hey, this is not validated. This is not confirmed. This is, kind of right-wing conspiracy nonsense. And then it's kind of come out that, no, that was legitimate. The laptop was real. That's all but confirmed by multiple sources. And yet there really was no retraction or apology for that. And so I think a number of items like that have made it very interesting. What's interesting to me on the political side of this whole thing is left-leaning people are very opposed to Elon Musk owning Twitter. And it's interesting to me because I think he's spot on the point we discussed yesterday as it related to Bill Gates. You can argue that no one's doing more for climate change than Elon Musk in terms of there's this national mandate and call for electric vehicles. We can debate the validity of those as something that reduces emissions and carbon output and, how much those actually help the environment all day long. But the national stance is this is good for the environment. And no one has done more to make that a possibility than Elon Musk. And yet on a very green initiative, typically supported heavily by the left, they hate him.
Yeah.
So it's kind of a weird lay of the land, so to speak. They're expecting the deal to close this year. Musk will provide $21 billion in equity. He's secured $25.5 billion of debt and margin loan financing. He will have to pay a breakup fee if the deal falls apart, which I don't expect it to. I mean, I think he seems like a guy that, for better or worse, if he says he's going to do something, he's going to make every effort to do it. He doesn't plan any layoffs. President Trump has said that he will not be coming back to Twitter. He's going to stay on Truth Social, which is kind of your call, man. But I mean, it's a huge story and we've talked about it a lot, but really the only time in my career that I can remember something like this happening. I don't know if you can think of any others.
Yeah, I can't, but I think it's really interesting when you really break it down that the original founders of PayPal and the economic output that they've had over the last 10 years is just unbelievable. Between Elon Musk and Peter Thiel, I mean, it's just crazy. Between the two of them, I think they're worth like $400 billion. I mean, they've just moving the needle all over the place in a lot of different industries. And this is an interesting move to be a tech founder that turns around and buys another big tech firm in a completely different space. I mean, for context, I think the market cap on GM is like 53 billion. So it would have been just as easy for him to turn around and buy General Motors outright for an additional $9 billion. So it's an interesting tack for him to buy a company of roughly the same size that has nothing to do with his core source of income. So it's just interesting. It's just, I mean, it definitely plays. People are interested, and I think it's very interesting.
Yeah, it's wild. You look at the way that he has parlayed that PayPal exit and the founding of that and the profits generated thereby just into an unbelievable career, whether you like the guy or not. He's done a lot of things. Right now, the market views a lot of those things favorably. So hats off to him. It was a big call, a big move. Fidelity making moves on 401ks. They are going to allow the 23,000 companies that utilize Fidelity as the administrator on their 401ks. They're going to allow all those companies to let employees buy Bitcoin. You can allocate, if you are on a Fidelity 401k plan moving forward, you can allocate up to 20% of your account to Bitcoin. Ultimately, that is going to be up to the plan sponsor. So in a 401k, the plan sponsors are within the company, the people making those decisions. Sometimes it's a CFO and a human resource director, people representing employees, whatever it may be. Kind of the fiduciaries on the plan will ultimately be able to decide if that option is on the plan. This seems reckless to me. I will say that. There doesn't seem to be quite as much interest in this as maybe the general headlines would reveal. The Wall Street Journal has an article that says that only about 2% of employers in recent surveys said they would consider adding crypto to their 401k. So this may very well prove to be something where we look at it and say, wow, I don't know if it's a great idea, or maybe it is a great idea that 23,000 companies add this. But by the time you boil it down and you're looking at, 460 companies, if 2% actually add it, I don't know that it's a huge impact. I remain concerned about the crypto space. And I think it could present its own set of problems as it relates to corporate liability. I mean, I think it's easy to think of big companies and the amount of decision making they should be having. But we manage 401k plans for companies with, a couple dozen employees in some cases. And they really lean on us to provide guidance because even the upper rungs of management don't totally understand how those plans are built, what investment options are available. I think some people may get suckered into offering Bitcoin when they probably shouldn't, and that could create some liability issues. So Tom, any thoughts on that at a high level?
Yeah, I think that if this does get traction, it's going to be exceptionally slow. I just think that from a fiduciary standpoint, when you're managing a 401k plan, you're choosing, even just mutual funds that represent the S&P 500. If you consistently pick a bad one that underperforms significantly and you don't make a change and you continue to have people invest in that, you can be held responsible for that. And so, having that option in there, is pretty sketchy. I mean, I remember early in my career when I worked as an intern at SunTrust, they got in trouble for when you auto enrolled, they basically set you to put 100% of your 401k into SunTrust stock, which caused a lot of problems because it's sort of it can be a slippery slope there. If the company performs poorly, not only can you get fired, but then you're holding 100% of your 401k in a company that's also underperforming. And, it's just in terms of allocation of capital, it's not in the best interest of someone who works there to also have all of their retirement capital locked into the company as well. And so, I mean, Halliburton's a good example of that, back in the day when they got in a lot of trouble. So it's a slippery slope. I think that if anything, if you turn it on, you'd have to have some sort of writing that says you invest in Bitcoin, you lose all of your 401k. That's on you, man.
Yeah. I mean, I think that's the thing. One of the big selling points of Bitcoin that you hear a lot less now is that it's an uncorrelated asset. A lot of what people really tried to push with Bitcoin was that, well, it's a cryptocurrency. It doesn't move with the market. It doesn't move like stocks, doesn't move like bonds. It's uncorrelated. There's some truth to that. The problem is people hear that phrasing, and it's very much a sales pitch, and they hear that phrasing to say, well, the market could be down, but this won't be. That has not proven to be the case. I mean, if you look back at 2020, even looking at this year, year to date, Bitcoin is down. Stocks are down close to 10%, bonds are down close to 10%, Bitcoin's down 13%. So if you held Bitcoin as a safe haven for a period in which other asset classes were going to struggle, it's not working. And so I think people are going to have to be very, very careful in terms of how they communicate the risks associated with Bitcoin. Moving on to earnings, heard from a bunch of companies. We're going to go through a number of them relatively quickly. We'll open up kind of in the staple space. Pepsi, a company we've been looking at quite a bit, seeing some strength on pricing, and that's really allowing them to grow, admittedly, somewhat modestly. Not huge growth for Pepsi, but they do have the pricing levers they've been able to pull. Tom, what'd you see?
What was surprising to me, and maybe this is just a little bit more backward looking just as a result of the timeline, but that Europe came in above expectations. They came in with growth of 11% versus an estimate of 7%, which I would not have guessed. I mean, part of my concern, I've been trimming back Pepsi a little bit for clients, was that they have a lot of exposure in Europe, but that seems to have been at least, bypassed for this first quarter. And then another one, Latin America, up 22% versus an estimate of 1%. So that's a huge growth for some pretty well established brands. So it seems like they're really getting a foothold in Latin America. I know Coke has a big presence there as well. And so it seems like they're definitely making inroads. And that's not an area that I would have expected to be a major player as it relates to this first quarter earnings number.
Yeah, switching gears, we heard from Raytheon Technologies, a big defense contractor. I think people have been very curious to see how the war was going to be impacting them. Stocks down about 1% in pre-market trading. I think, in general, the biggest takeaway that's potentially surprising is the war in Ukraine is not driving beneficial results for defense contractors. Raytheon, which has a pretty sizable aerospace division, they're actually being hit by it. They're unable, because of sanctions, to service specific parts of the world. They're not able to, provide parts, repairs, things like that, where previously they would be able to do so. Their revenue guidance for 2022 in wartime is actually slightly lower, and they credit that to an outlook cut specifically due to Russia global sanctions. So not necessarily a big win the way you might think for defense contractors. And a lot of those companies really kind of ran up in the early days of the conflict between Russia and Ukraine. They reiterated their earnings per share guidance, but that means to achieve that with a lower revenue profile, they're going to have to really operate very cleanly. Earnings came in slightly above expectation. Revenue was slightly below. So at least in the short term, it looks like they're, being able to kind of control those levers and operate efficiently. General Electric, Tom, interesting company. We've been looking at kind of this prolonged turnaround story for GE. What'd you see from them this quarter?
Yeah, so GE's been a tough one over the last couple of years, but they've done a lot of shedding of businesses and kind of getting down to brass tacks and what they're good at. And so this quarter we saw really good pickup in healthcare. Aviation's picking up nicely, with everything coming back online after COVID. But the Achilles heel for this quarter seemed to be renewable energy, and specifically onshore wind, just because of cost inflation, trying to find parts, supply chain stuff. They're having a really tough time making money in the renewable space. So it's definitely interesting, along the lines of Raytheon, where, you think war in Ukraine, you think, Green New Deal, you think renewable energy. These are the things that are going to be doing well, given the current environment. But we're seeing that's actually opposite of what is true. Raytheon's struggling, renewable energy at GE is struggling. These are things that you think there'd be a lot of dollars flowing to, but we're just not seeing it in the results this quarter.
UPS saw some strength, especially on pricing. They're seeing high single-digit growth on per piece pricing, not only in the US, but also internationally. Interestingly, volume does not seem all that strong. So they're really getting their expansion, kind of, as we said, thematically on the pricing controls that they have, which it's an interesting thing to think about. On one hand, you think, hey, I'd like to see more packages being delivered. That would be a good read through on the economy. On the other side, they're charging what they want for these packages. That's a good read through for the economy. And so it's kind of one of those, not necessarily a home run. You'd obviously rather see both of those boxes be ticked. Hey, we absolutely blew it out of the water because we shipped more than we thought we would, and we charged more per shipment. So you're not checking both of those boxes, but I don't necessarily view that as, kind of a gloom and doom scenario. Earnings per share came in decently above the expectation. It was at $3.05 per share. Expectation was $2.88. Revenue came in very strong, and they are doubling their share buyback program. Valero, interesting, oil market in general. I would think Valero is going to continue to benefit from, relatively high gasoline prices as they're refining gas. Tom, how'd they hold up?
They just crushed it. They do well anytime there's a big crack spread. So the crack spread is essentially the difference between the cost of unrefined oil and gasoline. And so what happened, we saw at the beginning of the year that oil ran way up, but it's really been kind of falling slowly over the last couple of weeks, but gasoline has not changed. And so there's a spread there. So you basically take the raw material and turn it into gasoline. And if there's a big difference in price, then you make a lot of money. And that's basically what Valero is doing. So they're, trying to refine as much oil as possible, really take advantage of high gasoline prices. Their estimates on earnings were ridiculous. I scrolled too far down past here, but let's see. We had they've made $2.31 on an estimate of 66 cents, and their refining margin was $12.74 billion on an estimate of 11.3. So that's a 91% year-over-year change, which is, just massive. But it really gives you a perspective of how quickly oil prices have gone up, especially gasoline. Refined gasoline has gone up quite a bit. And so they're just making hay as the sun shines. But this is a company that when oil prices are not doing well, does not do well. So this is their time to shine, and we'll see how long that lasts.
Lastly, DR Horton, home builder, increased their guidance for revenue by the top end by about $500 million, which is pretty sizable. They do think they are going to sell slightly fewer homes. And this is where, those ranges on guidance get kind of interesting. They previously said they thought they would sell between 90,000 and 92,000. Now they're saying between 88,000 and 90,000. So, still kind of clipping the top end of their previous guidance range. It's technically a cut, not a massive one. But they remain optimistic. They said, housing market conditions remain strong despite the rise in mortgage rates. So they're pricing some of that into probably their expectation. Hey, there may be a few less buyers in the market as mortgage rates continue to tick up, but they're continuing to experience home buyer demand that exceeds their pace of supply. We saw this very clearly in their numbers. The expectation was for them to earn $3.39. It came in at $4.03. Very, very solid beat there. Their revenue was $8 billion. The expectation was for 7.6. So pretty strong report there, Tom. I mean, does that gel with some of the broader narrative we've been talking about on the housing market?
Yeah, I think that we're going to see volume slow down significantly with rates where they are. It's going to take a lot more due diligence to really get into a home, with mortgage rates being up over 5% now. That being said, the prices aren't going to go anywhere until they get to a point where they're building more houses than there's demand for. And, I think that's just going to be the narrative until we start to see a surplus of houses starting to build inventory. Prices aren't going to come down. And I don't think that interest rates are going to come down anytime soon either.
This evening, we'll hear from General Motors. We'll hear from Texas Instruments. I think the two that people are most interested in hearing from will be Alphabet or Google and Microsoft. We'll hear from those companies after market close today. Those will likely be big needle swingers. If you're looking for something to kind of decide, hey, what's the market going to do tomorrow? I would be looking specifically at after hours and pre-market trading specific to Google and Microsoft. What is the read through? And I would argue that Microsoft is probably the more interesting story for me, just to see how they're operating. But Google may be the broader read through in terms of the state of the economy. What's happening with ad revenue? What's happening with search data? All of those kind of things. So that's kind of my view. And we'll wrap it up there. We'll be back tomorrow morning at 8:30, and we'll talk to you soon.